Paul Stamiska here with our February edition of our KML Foundation Table Talk vlog. First of all, it's been great to be able to come to you in 2023 here with a whole new set of guests and wonderful topics. But I'm going to tell you, today's topic is going to be a little bit different. In fact, when you hear the term, it might be even intimidating, certainly uncertain. The topic is Testamentary Charitable Gift Annuities. Boy, there's a mouthful, but I brought a special guest along today who's going to explain it, and I think you're going to understand pretty clearly what it is and how it can work. My guest today is Jim Holm. Jim is the executive director at the Wells Foundation and Wells Investments, and we're very glad to have him back as our guest today, and he really is an expert on these topics. So first of all, welcome, Jim.
Thank you, Paul. Appreciate it.
I have to say, first of all, what a mouthful. But let's start word by word, because I think it's probably not as complicated as maybe what it sounds. So testamentary, what does that mean?
Thank you, Paul. It's interesting. I was thinking on the way over here, I've been in and about charitable giving and investments now for over 30 years. And I'd like to say, going into a presentation, a group presentation, that, I've heard all the questions before. I'm never afraid of being thrown off by a question. This is the first time anyone's ever asked me to define testamentary. And I thought about it, and I did what any good researcher would do, got the dictionary out. And this is what the dictionary had to say. Testamentary, just take the root there, testament is a tangible proof or tribute. The second definition was an expression of conviction. And the third, and what we're really going to be talking about here, is more in terms of estate planning, an act by which a person determines the disposition of their property after death. And when I went through those three definitions, my first thought was, well, the first don't apply, the tangible proof of a tribute or expression of conviction. But the more I thought about it, the more I thought how they absolutely do apply. So yes, when we're talking about a testamentary charitable gift annuity, we're talking about disposition of your assets after you're called to heaven, but it's also a tribute. It's also a statement of conviction.
I think that the whole idea of what you talked about, because when I talk to people about their will or their estate, people think of it as simply a way to distribute my stuff. And I always encourage people to think of it bigger than that. It's their legacy that they're passing on, which means all the things that are really important to them. So it's not just the stuff. I mean, most important, I think people would say, is their Christian faith. And how do I pass that on? But then regarding their possessions, well, God's asked us to be faithful stewards of those blessings, and now we get an opportunity to share that with somebody else, to carry on that responsibility, to be a faithful steward of the blessings that they have. So I think the way you describe testamentary is pretty applicable. Let's go to the second part then. Charitable gift annuity. Explain that, Jim.
Yeah, a charitable gift annuity is some call it a split interest gift, where the donor makes the gift today to Wells Foundation to establish a charitable gift annuity. Once the gift is made, the donor can receive annuity payments from that gift annuity for life. Those payments can start immediately, or you can pick a time in the future or defer to an undetermined point in the future where you can start the payments. The longer you wait to receive the payments, the higher the payout rate is going to be. And then once the Lord calls you home, what remains in that gift annuity contract then gets distributed to the ministry that you choose when you set up the account.
Now, I have to tell you, Jim, I hear people refer or respond to that word annuity, and that's just like they automatically don't listen to you because they have a preconceived idea of what an annuity is, and it's not positive. How is this different?
It is different. There are different types of annuities. You can do most annuities are through insurance companies. Mm-hmm. It's a product that's marketed as an investment for retirement. You put money in. You can take it out lump sum after an extended period of time. They have a bad rep because a lot of times there are surrender charges and a deferral period that's quite lengthy. They're also considered a high commission product, if you will. When you're establishing a charitable gift annuity, this isn't a contract with an insurance company. It is, in fact, a contract with the charity. So in exchange for that gift, the charity is the one that stands behind and makes the annuity payments to you for your life. There are no commissions associated with it. However, it is a gift. It's not something that you can take back at a future date. You make the gift. It's an irrevocable gift. You're entitled to receive an income for that as long as you live.
And I think the people who understand annuities say, yeah, I know I get money, but I'm paying a big commission to the sales rep, the insurance agent. I'm also, whatever's left is going to the rich insurance company in the end. And this obviously is way different because both of those don't happen with a charitable gift annuity.
Correct. There is no commission at the end. Instead of that remainder going to the financial institution, it goes to the charity that you designate.
Now, okay, Jim, you're going to have to explain this now. We talked about you're going to create this while you're living because you're going to get income. And then in the end, when you die, it's going to go to a charity. How is the testamentary charitable gift annuity different?
Great question. When you combine the two, a testamentary charitable gift annuity is established at death, not while living. Think about it this way. When we set up our estate plan, we're directed to provide for our family. We also have an opportunity to make a gift to the Lord's work at that time. This is a way to kind of do both. You can set up a testamentary charitable gift annuity, fund it after you're in heaven. The annuity then will make annuity payments to your children or whoever you designate for their life. And then after the Lord calls them home, what remains in that gift annuity contract gets distributed to the charity that they designate.
So if I understand correctly, the concept is the same, except instead of starting this so I get payments my entire life, I'm going to start this when I'm in heaven, and then my kids get, or whoever I name as a beneficiary, will get the money.
That's correct, yes.
So I can see what you talked about. It's a benefit in both ways. Now, I'm not sure I heard a lot about this before. I don't know how many of our viewers have heard about this before. Is this something new?
Charitable gift annuities? No. And actually, you can trace the roots for a charitable gift annuity back to, 1831?
Wow.
So this has been around as a giving opportunity for generations. Wells Foundation started the gift annuity program within Wells back in 1965, 66.
Okay. So not new at all. Maybe I just haven't heard enough about it. Are there any particular reasons, maybe recent legislation or anything that the government has done that would maybe tax purposes or so forth that would maybe give us reason to say this is a good option to consider now?
Absolutely. And I think some of your other vlogs back in 22 talked a little bit about the Secure Act and the taxation of a traditional IRA. And that's really one of the prime opportunities for a testamentary charitable gift annuity. When an individual has a traditional IRA, it used to be, prior to 2019, that the heir, the beneficiary of that IRA, could take the payments out over their life expectancy. Since 2019, that's no longer the case. Now the heir has a 10-year window that they have to distribute or take those IRA payments within. And when you think about life expectancy, let's say the average individual lives to age 80, as an example. Their children are probably in their 50s, maybe 60s. Those are most likely your highest earning years in your life. And now you've just inherited a gift from your mother, your father, an IRA that will be taxed on top of the earnings that you're already receiving. By taking that IRA, instead of paying it directly to the children, pay it to this testamentary charitable gift annuity, and then the payments out of that gift annuity can be taxed to the children over their lifetime.
So this sounds like it's an obvious thing you should do. So you can use the remaining amount in your IRA to fund the testamentary charitable gift annuity.
Yes, it makes a wonderful tax-wise gift.
Wow. Now, it works for the charitable gift annuity. Are there other instruments that could be used in a similar way?
There are. You could use a trust to get some of the same effect. I like to describe them. They're both the charitable gift annuity, the charitable remainder trust. Are both split interest gifts. The charitable gift annuity is really the simple, the easy way to get that accomplished. If you have something that's more complex, maybe a gift of real estate, maybe you want to benefit 8 members of a family, then a charitable remainder trust would be a more efficient way to get that done. But for most people, most situations, that charitable gift annuity is a wonderful way to support the Lord's work and provide for your children.
Yeah, and if I understand correctly, the Wells Foundation can handle those more complex cases.
Yes, we've got a wonderful staff that deal with this every day.
Okay. And just for the viewer's point of information, I can help you get organized and get prepared to meet with maybe the attorney to create your estate plan. But I also am very thankful for the Wells Foundation and the work that they provide, because a lot of these people that are looking at a little bit more complex gifts, it works really well to work with the Wells Foundation. So clearly I see a great partnership in that case. Jim, is there anything else you'd like to add?
No, I thank you for the opportunity to come here. Charitable gift annuities, testamentary charitable gift annuities, I've heard described one other way, and that's a way to give it twice. Give a portion of your estate twice. Specifically, if you have a traditional IRA, you can give it to your children through that lifetime stream of income, but you can also give it to the Lord's work. So when you're called home, that gift is given again to the charities that you've designated.
Wonderful. I hear people every now and then say, I would like to give to charity, but I really want to take care of my family. I would say, first of all, that's the right attitude. Think of your family first. But don't think that giving to charity is going to hurt your family. There's so many ways that you can structure a good estate plan where you're going to remember your family very appropriately. You're going to remember charity according to what your heart is telling you. And maybe the one entity that isn't going to get a very large portion is the IRS. So think about different ways that you can structure this, and a good estate planning attorney is going to help you with that. Well, I really want to thank Jim for coming today and explaining this. When you first heard testamentary charitable gift annuity, I'm sure your head was kind of spinning. I don't understand what that means. But I think it's very clear to understand this is a gift that you can make through your estate plan that is going to really be a unique and special benefit for your loved ones. So if you have any further questions, I encourage you, get a hold of the Wells Foundation, and we'd certainly like to help you. Remember, this isn't just about distribution of your possessions. This is sharing your legacy, and what a great opportunity. Remember, we do this because it is your life. It's your plan, and it is your legacy. Have a great day, and we'll see you next month.